What's going on, traders? Andrew O'Connell here with Pristine Capital. Feels good to be back in the Philly area, back in the normal seat. We actually got some market relief today, which is pretty good. I guess you could call it relief. We're seeing some crazy price action. We're getting stocks that are reporting earnings and completely imploding. Today we had Upstart, which was down about 56%. I actually traded that stock today. After hours, we had Unity Software down 33%. These are crazy moves. We're starting to see capitulation in the market. So let's dive in and we'll talk through the price action. S&P 500, as measured by the SPY, finished up 0.23%. And remember, we have our CPI data point. It's coming out tomorrow at 8:30. This is a highly anticipated inflation print, as they all have been this year. And with how washed out some of these growth stocks are, and really just how washed out the market is in general, this really has the potential to send the market, for all we know, the S&P 500 could finish tomorrow up 2%, down 3%. It's going to be crazy. It's all going to be riding on this one binary data point. So yeah, S&P 500 basically unchanged. The Nasdaq QQQ actually bounced today, up 1.21%. Small caps were basically flat, up 0.03%. The dogs of the Dow Jones were down 0.24%. And our ARC Innovation ETF was down 0.12%. Pretty much everything closed towards the middle end of the day's range. And oftentimes before a big data point, that's actually pretty normal, that the market doesn't really trend in either direction. And it's really just a day where, the price action mean reverts intraday. The volatility came in slightly across all of these indices, which is always welcomed. And our breadth was pretty mixed across the board. My trend model is still at a -3. Finviz heat map, this definitely looks a little bit more benign, which is great. The other day we saw Nvidia was down 9%, Tesla down huge as well. So good to see at least some form of stabilization here. Sectors. Again, like I said earlier, we're certainly seeing capitulation in the market. Within cryptocurrency, definitely capitulation. We saw that crazy stablecoin UST that broke the buck yesterday, just absolute madness. And even intraday, I noticed a lot of these groups, for instance, this YOLO cannabis ETF, which has just been a horrible place to be for the past literally year and a half. This one at one point today was down something like 8%, ridiculous. Things that have been horrible all year, we're just, completely giving up the ghost intraday. Best performers on the day were energy stocks. They were up 0.91%. Software was up 1.3%. Chinese internets, they were up 2.86%. And biotech was up 5.17%. So kind of interesting. Ahead of the inflation data, we did see some preliminary moves back into, the software, the technology, etc. Style factors, our momentum style factor was up 0.6%. Growth was our best performing style factor that's ahead of CPI. So that could be a little bit of foreshadowing. Remember, pretty much all these investment managers, they are no longer overweight growth stocks. It's been quite literally almost a year and a half of these stocks just selling off, stair-stepping lower. This inflationary narrative has just become further and further entrenched. And I stumbled into a really interesting data point. Let's actually take a look at this. I stumbled into it on Twitter, posted it in our market analysis channel within our Discord. So this was from Jammin' Ball on Twitter. And this guy, he works for Altimeter, and he has a really good Substack where he analyzes the valuations on a lot of these cloud stocks. And look at this, the median cloud software multiple is now about 10% below the March 2020 COVID lows. So it's pretty crazy. A year and a half ago, these stocks were trading, they were literally flying high, right? And no one thought they were overvalued. Now we're seeing what looks like this final exodus from these names. If they even miss slightly on their earnings report, these names are down 30 or 40%. For instance, Upstart, check this one out. So I was looking at the earnings report this morning, and Upstart, I believe they beat on their sales and their earnings, and then they reduced their guidance, which of course that is the most important thing, what the company's guiding for in the future. But you could make the argument that the market's been sniffing out, that this company's not going to have good guidance. I mean, look, the stock hit a peak of $401. Now today in one fell swoop, it was down 56%. I'll show you some more abnormalities. SoFi, this company, their earnings basically leaked ahead of time. Like the data came out intraday rather than after the close. And SoFi like beat on their earnings. I'm pretty sure they raised their guidance. And this stock was still down like 18% right off the jump when those earnings came out. So it really just looks like right now, you know, and remember, I'm in the markets every single day, observing the price action, watching it. I've been doing this for years now. And you can tell when something just looks off, right? Like if you were looking at the price action, I'm sure you noticed this as well. Like we're just seeing these outsized negative reactions. And to me, what that's telling me is a lot of these institutions and a lot of these players, they're just so in over their heads, underwater on these names. And I think there's a lot of players out there that they just don't want to touch these with a 10-foot pole anymore. It's like, hey, if this thing misses, like, just get me out. You know, I've been riding these things down 70 or 80%. Like, I just need some alleviation of the pain. And yeah, I'm definitely noticing that in just the size of some of these moves. Like Unity Software, for instance, you know, this one, granted, it whiffed on its earnings, but this one is down something like 33% after hours. So just wild moves. You know, this is huge. So yeah, I definitely think the sentiment is pretty fearful out there. Let's take a look at our headline indices and see what's going on. So the S&P 500 is trading right around 4,000. And the 4,000 level, there's a ton of options open interest at that level. So definitely keep watching that. And I'm also watching on the weekly time frame this bottom of the yearly value area. Let's say we get some positive number for CPI tomorrow. Let's say it's, you know, just meets the estimate or even a little bit lighter than the estimate. Who knows? You know, all these inflation data points they've been beating, and they've been super hot every single time. So the market's just been selling off on every inflation print. But let's say, you know, the number comes out a little bit light. This would look great actually if suddenly, you know, the market has a little bit of a recovery, and then by the end of the week, this weekly candle just looks like, you know, we tested this yearly value area low, we undercut it, and then buyers stepped in. That's really like the happy path. That's the bright scenario. If the data point comes out really hot tomorrow, we know that so many players are on their back foot already. So that's what makes this really tough. In terms of my trades for today, let's take a look here. What did I do? Speaking of Upstart, I actually traded this one, so check this out. Upstart, I sold the May 20th 30 strike puts for $2.10. And yeah, I'm just trying to pick my spots and find opportunities where I can. Upstart has been really good for me in terms of just selling premium. So I wanted to just stick with it. And Upstart, you can see it would have to decline an additional about 10% by Friday in order for me to have to take delivery. Or not this coming Friday, the one after that for options expiration. So yeah, I took that trade. And then I did a few others. Let's look at these indices real quick. Nasdaq, this one finished up 1.15%, not too bad. Russell 2000. We do have that VPOC down here though. So yeah, if that inflation print comes out a little bit hot, never know, we could be tagging that tomorrow. Russell 2000, this thing just looks like a dumpster fire. And I think it makes sense. Like now the big concern in the market is a growth scare, you know, recession scare, etc. And if you think the economy's heading for a recession, it makes sense that people are kind of abandoning the small caps. Let's take a look here at the dogs of the Dow. Dow Jones, you know, for the most part, it's still kind of hanging on to these year-to-date lows. And yeah, this one is it's just much more of a slow mover. Let's take a look here. So in terms of my other trades, I took a shot on these ARC calls. These were actually marking at a 40% winner after Fed Wednesday. I was playing for a bounce, and I intentionally held on to this position just in case we got a real short squeeze move. That did not work out. I closed this one out for 31 cents. I had paid $3.35, so this pretty much negates the max winner I had on those Upstart puts that expired yesterday, or expired on Friday. Then what else did I do? So I noticed today As I was watching the price action, this really looked like, again, the market was washing out, sentiment, etc., etc. So I did take a trade to potentially benefit if we do end up getting a CPI bounce. So I took the SPY June 17th 397 calls for $15.72, playing for a CPI relief rally. And then as I saw this data point that I shared with you earlier by Jam and Ball about how these software companies, they're trading at valuations that are 10% lower than the COVID crash lows. I was like, you know what? I would be remiss if I did not put on some sort of longer term position. So I added these QQQJ December 16th of 2022, these 23 strike calls, and take a look at the QQQJ. It's a bit of a longer term position, but this will benefit if some money flows back into these high flyers. Because I'm pretty sure if I'm seeing that note that, hey, these companies, they're trading back to their COVID lows essentially, I'm pretty sure that note has circulated throughout the buy side, throughout the sell side, etc. So I'm definitely looking to this group for a potential bounce. Let's take a look quickly before we go here. I'm going to pull up our investing.com probabilities of rate hikes, because the CPI data is definitely going to impact this. So let's pull up our rate monitor tool. 5 weeks until the next Fed decision. It's going to be on June 15th of 2022. And as of right now, there's an 82.9% probability based on the Fed fund futures that the Fed is going to do a 75 basis point hike. So that's basically priced in a 17.1% chance that it's going to be a 50 basis point hike. So yeah, depending on how the CPI data comes out tomorrow and how the PPI comes out the day after that, that could certainly influence these interest rate probabilities. So definitely keep an eye on that. The inflation data is coming out at 8:30 a.m. tomorrow. So definitely stay sharp out there. Tomorrow I'm expecting another roller coaster of a day, team. With that being said, that about does it for this market recap video. Hope you all enjoy the rest of your evening.